The US national debt is skyrocketing, over $33 trillion and growing fast. What happens when this debt bubble finally explodes? Will it cause global chaos? How will it impact your money, your investments, and is crypto the answer? Stick around, because today we're diving deep into the looming debt crisis, and it could change everything. Let's break this down. The US government is borrowing money at an insane pace. During the 2020 COVID-19 crisis, when the world practically shut down, the debt grew by $4.5 trillion total. But right now, the debt is increasing by nearly $1 trillion every 100 days. And we're on track to see similar numbers this year, despite there being no global pandemic driving it. Now, this isn't just a temporary spike. Over the last 2 decades, the debt has been increasing steadily due to increased spending on social programs like Medicare and Social Security, as well as on defense spending and responses to crises like COVID. And here's the kicker. Interest payments alone have hit over $1 trillion this year. That's more than what the US spends on defense. Let that sink in. Just paying the interest on the debt costs more than the entire US defense budget. And it doesn't stop there. As we hit the debt ceiling, things are about to get even more complicated. What is the debt limit? The US debt limit is simply the maximum amount that the government is legally allowed to borrow to pay its bills. Think of it like your credit card limit imposed by your credit card provider. Right now, that debt ceiling is set at $28.4 trillion, but we've already hit it. To avoid defaulting, the Treasury Department is using what are called extraordinary measures. Essentially, they're shifting money around by suspending investments in federal employee pension funds and redeeming certain investments early. This buys the government time without increasing the official debt on paper, but it's just a short-term fix. Eventually, the cash runs out. If Congress doesn't raise this limit soon, the US won't be able to pay for critical services like Social Security or defense. This could lead to a financial crisis with far-reaching effects. But what happens when the US can no longer avoid these payments? That's where things spiral out of control. When a country borrows more money, it has to pay interest on that debt, just like you do with your credit cards or mortgages. And as debt increases, so do interest payments. And now, the US is spending over $1 trillion in interest alone. The problem is, as the debt grows, the government has to borrow even more money just to cover those interest payments. This is what we call a debt spiral. It's a vicious cycle. Interest rates go up, debt servicing costs rise, and the government has to borrow more, leading to even higher interest payments. The debt spiral doesn't just affect the US. Because the US Treasury bond market is so vital to global finance, any disruption could cause a global economic shock. The US debt isn't just a national problem, it's a global one. For the past 50 years, the US Treasury bond market has been the most important financial market in the world. Countries, pension funds, and banks around the globe hold trillions of dollars in US bonds. But what exactly are these bonds? When the US government borrows money, it issues bonds, which are essentially IOUs that investors can buy. These bonds are considered some of the safest investments globally because they're backed by the full faith and credit of the US government, often referred to as Uncle Sam. In fact, bonds issued by the US government are a type of what's referred to as a US Treasury, which includes a broader range of government debt securities such as Treasury bills, notes, and bonds. If the US defaults or struggles to pay its debts, it calls the safety of these bonds into question, causing bond prices to spike due to uncertainty about repayments. This could ripple through global markets, leading to a worldwide crash. It's like pulling the bottom card from a house of cards. What makes it worse is that China and Saudi Arabia, two of the biggest buyers of US debt, are slowly backing out. And with demand for US bonds decreasing, we could see a major financial crisis if things spiral out of control. With traditional markets under this much pressure, some believe cryptocurrency could offer an alternative. Let's explore if crypto can really be the solution. With traditional financial systems becoming more unstable, some believe that cryptocurrency could offer a solution. Take stablecoins for example. A stablecoin a type of cryptocurrency backed by assets like the US dollar, with the idea being that each coin can always be exchanged for $1. These stablecoins are playing a bigger role in the financial world, especially in the bond market. Stablecoin issuers are now significant buyers of US debt. In fact, if they were a country, they would rank as the 16th largest holder of US treasuries, surpassing countries like Norway and South Korea. The growing demand for US debt from stablecoin issuers helps stabilize the market, even as traditional buyers like China and Saudi Arabia pull back. Now, if you're looking to learn more about the world of crypto and DeFi, I've got a great resource for you. Head over to the link in my description to access free guides, including a DeFi masterclass and tips on generating passive income with crypto, courtesy of the guys at CryptoLabs. It's a great way to explore new opportunities and gain insights into the crypto space. Whether you're a beginner or an experienced investor, there's something valuable for everyone. But can crypto really save us from a full-blown debt crisis? As promising as that sounds, crypto isn't without its own risks, especially in such a volatile financial environment. Here's the thing, crypto isn't foolproof. In fact, cryptocurrencies like Bitcoin have shown just how volatile they can be. During the COVID-19 market crash, Bitcoin lost over 50% of its value in a matter of days, which was a tough pill to swallow for crypto holders. And while it has since recovered, it shows that crypto isn't immune to the swings of the broader financial markets. Plus, as interest rates rise, crypto may face serious challenges. Investments like Bitcoin are often seen as speculative, and higher interest rates could lead to people to move towards more stable assets like bonds or cash. As much as crypto could play a role in a financial crisis, it's still incredibly risky. So while crypto may help in some ways, it's not a guaranteed solution if the US faces a full-blown debt meltdown. This leads us to the big question, how long do we have before the US debt bubble bursts? Let's take a closer look at the timeline. Experts estimate that we have about 20 years before the US debt reaches unsustainable levels. That might seem like a lot of time, but is actually a best case scenario. The reality is, if investors start losing faith in the US's ability to pay off its debts, things could spiral out of control much sooner. The longer we wait, the more we'll have to borrow just to cover the interest payments. Imagine this, every year a larger portion of the federal budget goes towards paying interest rather than on programs that could actually help the economy, like infrastructure, healthcare, or education. It's a ticking time bomb and the clock is running out. So what happens when the debt bubble finally bursts? Let's dive into what the future could hold if we don't take action soon. So, what happens when the debt bubble finally bursts? The short answer is, it won't be pretty. The US could face a failed treasury auction, meaning there wouldn't be enough buyers willing to purchase the US debt. This would force the government to make drastic cuts to critical programs like Medicare, Social Security, and defense. Interest rates would soar, making it difficult for people to afford homes, cars, or even pay off their credit cards. But it gets worse. The US dollar could lose its status as the world's reserve currency, triggering a massive financial shock that wouldn't just cripple the US, but could reverberate across the entire global economy. This raises the final question, can crypto truly save us, or is it just another piece of the puzzle? Crypto does offer some intriguing possibilities. Stablecoins are already influencing the financial landscape by creating demand for US treasuries, and Bitcoin provides an alternative store of value outside of traditional banking systems. These innovations offer new ways to hedge against volatility in fiat currencies, which could be beneficial if the US dollar weakens. However, it's important to remember that crypto is still an evolving market, and it comes with its own risks. Cryptocurrencies are subject to extreme volatility, and while they can offer protection during inflation or currency devaluation, they are not immune to market swings. In fact, in times of financial crisis, investors may still flock to safer, more established assets like gold or government-backed bonds, leaving crypto in a precarious position. Ultimately, while crypto could play a role in cushioning the blow of a debt crisis, it's not a magic bullet. It's just one potential solution among many, and its effectiveness will depend on how global financial markets respond to the larger crisis. What's clear is that no single asset, crypto or otherwise, can fully insulate us from the risks of unsustainable debt. So while crypto might help some savvy investors, it's not going to prevent a full-scale financial meltdown. It's a piece of the puzzle, but it won't be the thing that saves the system. If you found this video insightful, make sure to subscribe and hit the notification bell so you don't miss any updates on the global financial trends that could impact your future. Thanks for watching.